Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, December 19th, 2025. S&P 500 currently sitting at 6834. I'm David Zarling. I'm here with Ian McMillan. We got Christmas next week. You ready to go?
I guess so. I did have to, I had to spend $35 for some express shipping for my wife. But yeah, I think we're good to go now.
Okay. Are you an elf on the shelf family?
We're not.
Yeah, we aren't either. And I don't know when that was invented, but we know a couple. It's an interesting way to go about things.
Yeah, I don't know if it's too late to start for like the 6-year-old. It would be good for our 2-year-old, I'm sure, but
yeah.
No, I think that's past us though. I think that's passed us by, and that's okay.
It is.
We didn't jump on that.
Yeah, I don't know.
I mean,
that
we could start it. Do you think your two youngest would fall for it?
I'll try it. I'll try it for all of them. I'll see if the 21-year-old buys it. Whoa, elf on the shelf.
Yeah, he made that mess in the kitchen counter.
Yeah, why does he have to be mischievous? Like, are our wives not stressed out enough during Christmas that we have to add a mischievous elf?
What if he did like really helpful stuff? Like he did the dishes.
I like that. We call it the gnome at home. Like switch it up. Elf on the shelf is just a jerk. The gnome at home is helpful.
I think they call it the wench on a bench. That the we're not gonna go there. We're not gonna go there.
I don't know that one, but
yeah, that's a thing. I've seen it in stores.
Really?
I'm not making this up.
Okay.
Wench on a bench.
You're gonna get in trouble. You live?
Yeah. Oh, minch on a bench. Minch on a bench. I'm sorry.
And that's a Christmas thing?
It's not a Christmas thing.
Oh.
It's a different religion.
Got it. Oh, really? That's the
yeah,
Hanukkah
they had to have
version.
Something, man. They had to have
Hanukkah,
something.
That's the Hanukkah version of Elf on a Shelf, Mensch on a Bench. Okay. Interesting. I learn something new every day. I had not heard of this one. But we're not gonna. We have to provide our listeners with everything this week.
We got to get off that.
Well, we're gonna take next week off for Christmas, so we got to give them. I'm okay that we went there. I mean, got to give a full episode, but we've had a nice recovery in the market this week. We're, days away from the Santa Claus rally period starting. The incorrect way to think about Santa Claus rally is just thinking about December. It's not how it works. Santa Claus rally period is the last 5 trading days of the year, plus the first 2 of next year. So that'll be starting next week, and we'll see if we get a positive result during that period or not. But we're almost to the end of 2025, maybe a year known for silver and gold.
Yeah, I assume that if someone showed me year-to-date asset returns, I assume those would be the top 2.
Yeah, they're going to be up there. I mean, they really haven't looked back.
Dollar's still going down. It's up a little bit this week.
Yeah, silver up about 120, 130% on the year.
That's more than stocks.
Yep. More than Bitcoin.
Oof, Bitcoin.
Gold up about 67%. I know the kids will love that. So, I mean, hard to argue with those moves for the year.
Good for that.
Where would you like to take us? What do you want to cover? I mean, we've got S&P 500 reclaiming important levels.
What do we think about that? I mean, so we're going to end up. It was a green week. We're back to where we were last Thursday. But last Friday was weak. Wednesday was a little suspect, but we recovered that. We're back above 6,800.
Right. The volume weighted average price from the November low back above the volume weighted average price from all-time highs using the S&P 500 Was that a bear trap? Don't know. We'll see what next week brings. And we got to close today. I mean, we're still a few hours from close, but I think we now know that 65.50 on the S&P 500, that's where we bottomed both in October and November. That's where supply and demand dynamics change. I mean, it's why we use charts. We can see that. And so as long as we're above those levels, makes sense that we've consolidated here. Hasn't been easy. Choppy markets aren't necessarily easy. And does it feel like yesterday that we had the tariff tantrum, that we had a 20% correction this year? Does it feel that way? Where do you think investors are on this? Do you think they're still in disbelief on that on this recovery that we've had since the April lows?
Golly, it feels like it was 6 years ago to me. Yeah, we recovered quite. There's another V bottom. Another year with another V bottom. Might get one, probably get one next year at this rate. Should we expect to get one next year?
I don't know. Is that the trend? Could be. Could be that V bottoms are the trend.
I mean, we are so, and there was some nasty, you get to April 4th and you showed people that chart and said, yeah, we're going to recover all of that by the end of June. We're going to be in new all-time highs, and then we're just going to keep going.
Market doing its job. But I think 65.50 is important. If you use the Qs, QQQ, 584 is important. And you still have risk on areas leading, whether it's biotech or aerospace. I mean, aerospace going out at new all-time highs on an absolute relative basis using ROKT, an ETF that's aerospace centric.
Man, what do you think? What do you think about the NASDAQ?
Are you using Qs or are you straight up NASDAQ?
You think about tech? You think we're going back? Think we're going back to growth? And mega caps.
Good thing we've got charts to use. I mean, growth versus value using SPY-G and SPY-B has been corrective since September.
Yeah, that's a tough one.
Rising 200-day, though. Near-term sequence of lower highs and lower lows. However, big picture, higher highs and higher lows. So growth versus value, definitely corrective. Near-term, uptrend. Long-term, tend to defer to the primary trend, the long-term trend. But to your point, I think when you see things like financials doing really well, industrials trying to pick up, maybe there's a case for value going into 2026. This is like the third year in a row where we're not going to have a tremendous amount of stocks that outperform the S&P, and you just wonder if 2026 is going to be.
How many have outperformed so far this year? Do you have?
Well, I know we covered this last week, but I think it was about 38% of the S&P has outperformed the S&P. That means 62% have underperformed the S&P, stocks within the S&P. So it does make you wonder if, we're going to see greater participation in stocks in the S&P do better.
Maybe that's the new normal.
Could be. I mean, when you do have the Magnificent Seven doing what it's doing,
I wonder if we get a hard reset to, I don't know, because the value, small caps, all this stuff, it makes its attempts. Never can quite do it. Not saying that that's what's happening on this latest attempt at outperformance from those areas, but it is a behemoth. Cap weighted indices, man. And I think RSP looks pretty good.
Yeah, equal weighted S&P.
But then, the relative chart,
not as great.
Yeah. Leaves a little bit to be desired, but it's almost good.
It's almost like the momentum factor has meaning.
It's very, very hard to stop that train once it's rolling. Speaking of momentum, having a nice day today. MTUM.
Yeah, S&P momentum. Even the supporter of this podcast, the Adaptive Select ETF. This would be a good segue to highlight them. Adaptive Select is listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. I think your point's a valid one, that during this November correction, momentum was underperforming, but it is one of the most prevalent factors in markets. And are we going to see a return to that? And does it just so happen that momentum was in growth? Could you see momentum in value? You could.
Could.
Definitely possible.
You like anything outside the US?
Yeah, I think it's interesting how, emerging markets was setting up.
Yeah.
And that it didn't really quite pan out. I would even say like Brazil. I just wanted to say that word. And some of the Latin American names. Peru looks good, obviously, because it's heavily precious metal mining weighted. But there's still some things, whether you're looking at Austria, Spain, European financials, like if European financials continue to go out at new all-time highs, how bearish can we really be? Even Argentina or currency hedge Japan.
No,
I don't know.
I 100% agree. I mean, you would think now maybe that's Bitcoin. I mean, we did discuss this last week. Bitcoin usually seen as like a leading indicator, I would say, risk on, risk off. Now there's periods where that's not always the case. I mean, Bitcoin can have a bad year and stocks can have a good year, but overall I would say the uptrends are pretty, but everything else is recovered. The things you mentioned continue to stay very strong. I don't know what European financials are doing, but I would add that to, there you go, up more all-time highs today. Yeah, hard to be bearish and maybe continue evidence that Bitcoin's just got its own issues going on, maybe. I don't know. Hasn't affected many other assets yet, though.
Right.
I feel like 4 or 5 years ago, or even a few years ago, Bitcoin being down 40% or whatever, it's 30%. Everyone's just kind of shrugged it off, and I don't know.
You're just saying that previously highly correlated to risk assets.
Yeah. Especially from I would say at least from a sentiment gauge, but nothing really not that impressive this week. I mean, it's been sideways for a month. I wouldn't say really participating in any rallies that stocks have seen.
Well, that's why each chart has to be taken on its own merit, right? There things go in and out of correlation. And can Bitcoin go to 50,000 and equities continue to move higher? Why not? Who are we to tell the market what to do?
Well, right. And I'm sure there was, Bitcoin below 107,000. So that was back in early November, right? I mean, that's kind of makes you sit up and say, okay, are we going to go into a risk on environment? And, stocks are, I'm not saying they've gone up in a straight line, but they're green. They're green since early November. And that's the S&P. IWM is done even better.
Yeah. And you look at crypto overall, like not just Bitcoin, lots of pain.
Lots of pain.
A lot of corrective behavior, breaking important levels, broadly speaking, hands off, can't be involved in it. And so, yeah, it is interesting to see I'll call it decoupling of correlation of equities versus crypto. But that's why, as technicians, when you use charts to study supply and demand, these are things that you can pick up on, is when things do decouple, and it's fine. Like, I'm sure there's Bitcoin maxis out there that are freaking out on the idea of Bitcoin going to zero. Bitcoin going to zero I don't care. It can go to zero.
I will not be riding it to zero.
Right. But what about your diamond hands, Ian? What about your pride? Why don't you lean into your pride as an investing philosophy?
I lean into my desire to make money.
That's right. Oh, is that why you're involved in markets? Not for pride? It's for making it, protecting money?
Clients and myself.
Right. So it is interesting, and I still don't feel like it's noisy enough out there for the correction to be over in Bitcoin. Maybe it is. I don't know. I'm not here to tell the market what to do, but for sure, definitely in a corrective behavior, more so than the market. Something you got to pay attention to. Meanwhile, risk on areas, even equal weight discretionary versus equal weight staples moving higher. Not a bad thing. Some areas of international moving higher, not a bad thing.
High beta, low vol relationships.
High beta, low vol.
Put that, like you said, equal weight discretionary, equal weight staples. Silver, gold. Silver continues to lead gold. So I assume that's positive for precious metals. Has been, we got a big, very big failed breakdown in that relationship at the end of June. And I'd say that's kind of when, because that was the debate, is gold miners, these areas looked good the first half of the year, but on a relative basis, it was, kind of just keeping track with the S&P.
Well, it isn't
really
interesting.
Took off, came back down, and then really took off.
Yeah, big island reversal there. And isn't it interesting that precious metals and financials are doing so well while crypto is not? Remember the whole DeFi over TradFi, right? We need to be in decentralized versus traditional finance. The banks are just jerks. And I'm not saying they're not. I'm just, if you're in the market to be in relative strength and the places that are doing well and avoiding the places that are not, it's been precious metals and TradFi. Hate to break it to you guys. That might be hard to hear. And maybe maybe this episode is marketing a shift in that relationship. Maybe, I don't know, maybe Bitcoin rips from here. I don't know. But for the past few months, that has not been the case. You want to be in physical stores of value versus digital stores of value and traditional finance over decentralized finance.
I agree.
How about fixed income? Anything there? I know it's not as sexy as equities.
Woo! Fixed income. Continue to see rates go up. 30-year treasury yield back up above 4.8. Just fascinating, man. 3 rate cuts over the last few months. I think we've had 3. And interest rates continue to go up, which just goes to show you that bond market more powerful than whatever the Fed wants to do.
Agreed. What else do you want to highlight?
Gosh. What else to highlight, Dave? It continues to be a market that, they save it. They save it. Now I wouldn't say we're quite out of the woods. Yeah, you always want to get to new all-time highs. I would also add that the amazing year that gold and silver have had, I would say that the long-term charts suggest that this won't just be like a 1-year outperformance thing.
So you're saying there's the possibility exists of precious metals continuing to outperform.
Pretty solid possibility.
Yeah.
Big bases in a lot of those relationships. We mentioned, silver versus gold. That's just a positive kind of sentiment right there. And then you can take that, platinum, palladium. I think they've done pretty good.
Well, and I think you bring up a good point. It was just 3 or 4 months ago that silver had a 0% return from 1980.
Wow. How dumb do you feel if you've been holding silver for 45 years?
Not dumb anymore.
And now look at us.
Yeah. And I think that's important. We're exceeding the 2.618 extension of the base in gold going back to August of 2011. Could gold continue to, again, it goes back to momentum. Things that tend to go up in price continue to go up in price. And again, it's why you're involved in markets, right? It's about protecting purchasing power. Every has an opportunity to go somewhere. And speaking of the dollar, if you just held dollars, the trade weighted dollar is still sitting below 100, still sitting below a 200, falling 200 day, while equities and precious metals move higher. When you're trying to maintain your purchasing power, kind of important to be in those areas of strength.
Have to be. You got to at least try. You got to at least put your money to work and try.
Yep, agreed. Anything else you want to cover before we make this a short and sweet episode before Christmas?
I don't. Kind of wait and see mode. I mean, hey, the market gets bought up where it needs to get bought up at. I will give it that. The areas that need to work, continue to work.
Continues to be risk on environment.
Market it just finds a way to figure it out. Save itself, grind higher.
Not a bad thing.
I guess that's not bearish, Dave.
It's not.
If we were saying the opposite, the market can't figure out how to go higher, we'd probably be in a downtrend.
Yeah.
We'd probably be wondering where all the selling pressure is coming from. Everyone wants out.
Agreed. Well, I just want to say I appreciate Ian. I hope you and your family have a Merry Christmas. I hope everybody listening to this has a Merry Christmas. Great time of year to make family great again. Get together with friends and family and make those deposits into their life. Kind of an important celebration, right? Celebrating the Savior of the world arriving and Jesus. Pretty exciting. And so I hope you enjoy your time off next week. We will not have an episode recording next week, and we'll be back January 2nd, and we'll even have some 12 months of information to cover. That'll be great.
Yeah, that'll be good. We'll have monthly candles. We'll be done with Santa Claus rally. Well, no, we won't be. Will we?
We'll have one more day. We'll have one more day.
Monday, yes. We'll have to go through Monday. But yeah, it'll be good.
Awesome. Well, thanks everyone for listening. It's been a great year. Please share us on your platform of choice and give us a high ranking. We really appreciate it.
Have a great weekend, everyone.